Welcome to the IFX Expo Asia 2022. We are glad to be back after a few years. My name is Supriya. I will be your host for today. To kick off the first day, I'm happy to announce the first panel, Technology of Tomorrow, Key Developments in Trading Tech. This is bringing together some of the leading technology experts. Please welcome the moderator, Tom Higgins, the CEO at GoEye and Crypto Switch, who will introduce his panel. Let's give them a warm welcome.
Good morning, everybody, and thank you so much for getting up. It's actually quite early, I think, in Bangkok for this the first panel that's opening the whole event, and I'm very proud to be asked to moderate this panel. It's thank you so much for giving me the opportunity, and also to have this great bunch of people that some of them I've known for many years and some not quite so long, who are such experts in their relative industries. They're all technology providers of some sort. They are all incredibly well experienced in our space, and they will be able to give you lots of useful advice on how to carry on and use the technology in the right way going forward in our rather complicated world that we have now and that is coming. So we're going to be looking at how technology can continue to disrupt trading. There is more automated trading, algo trading, social trading. There's all sorts of different ways that people trade now than they used to in the past. So we're looking at how that's changed, and we're looking at how that's going to be changing in the future and how you can benefit from that and how, as brokers, your clients can benefit from that. So I'm going to ask each panel member to introduce themselves and their business for 30 seconds each, max. So we've got Alex from oneZero, Cristian from Centroid, Or from Panda, Andy from OTSO, and Vitaly from DevExperts. So Cristian, if you want to start.
Hello, everyone. Good morning. My name is Cristian. I'm the CEO of Centroid Solutions. We are a technology company headquartered in Dubai and with presences around the world. And we focus on providing technology solutions for brokers. In essence, we offer three solutions. One is a bridging and connectivity engine. The other one is a real-time risk management system. And we also offer a hosting solution. And our solutions are built with a lot of experience in the market, being able to cater both for new entrants in the market as well as very well-established brokers, liquidity providers, and so on. Thank you.
Hello, guys. My name is Or. I'm from Panda Trading System. Basically, Panda Trading System was established 15 years ago. We are providing all the technology aspects that a broker needs, from CRM to web trader, mobile application, and we're also doing custom developments. Happy to be here in this panel, and Andy, go ahead.
Good morning, everyone. My name is Andy. I am from the OTSO Group. I'm the Chief Business Development Officer of OTSO Group. So basically, OTSO Group is a technology provider. We have three main business units. The first one is OTSO FinTech, which provides the turnkey solutions including trading platforms and consulting service, CRM, etc. for those institutions who want to do their brokerage business. The second one is AnyPrime, which provides liquidity for FX brokers. And the third one is Sofinex, which provides social trading solutions for all types of financial institutions, including security companies, FX brokers, crypto exchanges, etc. So we just launched our new social trading solution this month. So please feel free to drop at our booth at number 15 and number 16 for more details. Thank you very much.
Good morning. My name is Vitaly. I represent DevExperts. DevExperts is the software company that builds trading platforms, multi-asset, multi-market platforms for equities and derivatives, CFD, Forex, and crypto.
Good morning, everyone. My name is Alex Neer. I'm the Executive Vice President of Retail Products and Strategy at oneZero Financial. oneZero has been in the industry for 13 years. We are one of the market-leading technology vendors in aggregation, connectivity solutions, reporting, and for brokers and market participants around the world.
Thank you very much, everybody. And just like Alex was saying, they've been around 13 years. It's GoEye's 14th birthday in a couple of weeks' time. And so I've seen So many changes in the industry from how people traded. And I started in the industry, FX industry, about 25 years ago when it was very different. It was a completely different world with almost no automated trading. But now, where we are today, the question I'd like to put to the panel, and any of you can pick this up, is how do millennial investors trade now? You know, looking at day traders, buy and hold traders, social and copy trading, and algo trading. How do they trade now compared to how they used to trade in the past? And if you can think about the future as to how your technology will benefit the way that's going, that would be a really good add-on as well. Who would like to start?
I will.
Okay, or.
Okay, so basically, when we're looking on millennials, the first thing that we need to understand in technology that 90%, and I'm conservative here, are using mobile. So if you're a broker, you should have mobile app first. Secondly, if we're speaking, we need to speak about the onboarding process. The millennials, the young generation, they want everything and they want it yesterday. So you need to have an onboarding process that is relatively smooth. You have a lot of KYC companies around here and around the world that are doing everything smoothly. And after maximum 10 minutes from the moment that they got into the app till the moment that they are able to trade, should be at least, not at least, maximum 10 minutes. And after they got funded and everything is okay, you should think about the content, because the content for millennials, it's not the content of the traditional traders. Like, the content is different, they are trading differently, usually they don't care about what's happening with the oil barrels in the US, and they don't care about the Fed. You need to give them the content that they would like to see. As you can see what happened with GameStop and all of this 1 year ago, they are trading different from most of other traditional traders. The last part that I mentioned is, as Andy said, is social trading. They like to see what other people are doing. They like to follow others. So if you have the part of social trading within your trading app, you should have it. But if you don't have it, you should. And obviously, it should be simplified. So if a trader, a young trader is going, he doesn't care about what is the ROI, and you should do everything simple. This is the first time that they see the platform. This is the first time that they want to compare, and you should keep it very simple, so in order to them to perform the actions.
I've got a question actually to ask based on that. Is with KYC, and this is to anybody, how easy is it to do automated KYC for different countries in the world? Because I know in the UK it's very straightforward, but I also know that it is actually difficult in some parts of the world. And how do people manage that?
You want me or?
You want.
Look, from a tech provider side, I can tell you that we have a lot of integration with different KYC vendors. And each region required a different integration. So it's not easy, but as a broker that is coming, you need to choose the right KYC provider that is exact match for his region. And obviously, in terms of integration, as you mentioned, in the UK, for instance, once you are doing the KYC process, you need to put a field of address and building number, a few other. And for instance, if you will go to other country, it doesn't need to do it. So the best way is to understand who is the tech provider that you are using, if he is able to do the integration, and obviously choose the right KYC provider that is within your region.
Christian, I think you were going to add something to this.
Yeah, not about the KYC process, because I don't have that much experience in that, but I wanted to basically add to what Or mentioned, that definitely what's prominent about the newer generations of traders, millennials and even younger, is that they are very digitally able, right? They love everything that is to do with technology. They're very literate in that. They're continuously connected and so on. So it's very likely that they are going to be looking for brokers that are also very sophisticated in terms of their operations, with automatic KYC, straight on mobile, effortless, and also when it comes to customer support, through AI, completely automated, completely easy, as well as having a lot of information online, right? Trading, news, and so on. They definitely do that. However, what I wanted to mention is that based on that, it's still not easy to categorize that the traders will just trade in a specific way. What we see is that quite a lot of the millennials are very good at programming. So it's not uncommon for them to build their own trading robots, to have a complex strategy. So in essence, it really varies. I cannot, let's say, put them under one specific category. And in order to be able to obviously cater to these requirements, it's very important that brokers have the right technology that is versatile and that is able to basically at the same time have multiple offerings that match different trading styles. Because what's also quite important about these traders, they are not patient. They will most likely test and trade with multiple brokers at the same time in order to check which ones can give them the best offering that matches their requirements. And in case they find one provider that is better, they will just be very quick to move. They're not, let's say, as loyal or conservative as the older generations of traders. So that's why broker needs to have a versatile technology in place that is able to have multiple offerings that are for multiple styles, and then it's very important to be able to identify the type of trader and what they are looking for and try to give that to them. And it's very challenging because the trading pattern of different traders, it's not always the same, it's changing. So you need to do these checks continuously, basically. So what I think is very important is that you want to have from your trading platform and from your trading infrastructure to have the ability and the flexibility and the scale to be able to cater for that. So it's very important to have your own dedicated setup, basically, where you can control all these things.
Alex, I think you want to add something, yeah?
Yeah, I was going to say, from oneZero's perspective, we don't really do KYC, but to not do KYC, but on behalf of doing for the clients. But as Cristian explained, from oneZero's perspective, we see a significant increase in trading activity from social trading, copy trading, algorithmic trading, and also crypto trading. The challenge that I see that with some brokers in the industry and what they actually do is, though, it shouldn't be actually looking at the actual behavior of the specific trader, but actually managing the risk as a whole, centrally, and having a liquidity strategy to manage that. So what I mean by that is, in terms of, what do you call it? If a broker, and I'm going to use some legacy terms here, if a broker has 3 A book strategies or 3 B book strategies across multiple different platforms, the challenge there is that what might be toxic in one platform may not actually be toxic when commingled with that flow with another platform. So at oneZero, what we try to say is that, and managing, we say that we should be managing all of your liquidity and your risk centrally, and then being able to handle that flow and all different types of flow. What some people don't realize what some people haven't realized in actually dealing with such trading as copy trading or social trading is that there is a very common financial technology term called machine gunning. So what that actually is where multiple orders are hitting or coming into the system and executing or requesting to be executed at the same price. This is actually a very, very difficult situation because what happens is you have, say, your leader who submits the trade. Let's say he sends an order for 500K on Aussie US. Simultaneously or straight away thereafter, you've got 50 other traders that are around the world submitting that same trade at that same price. What happens with that? The LP doesn't get happy. They get frustrated because you're effectively sending that information to the LP of saying the first order comes in, it gets executed, then the multiple orders come in thereafter, and that depth's no longer available, but they're still trying to send at that price to get executed. So what happens ultimately is the clients get slippage, there's a worse off execution, your brokers get almost like a poor reputation because they feel like they're getting a bad client experience and the LP is unhappy. So at oneZero, what we try to do is explain to our clients in handling that increase in activity of social trading and copy trading is you need to send the orders to your LPs as full amounts. But that's a real big challenge because how do you send a full amount order when you've got one person sending a trade, but he's not necessarily speaking to the other 50 traders around the world. So at oneZero, we have a tool called Systematic Hedge. And what Systematic Hedge does is it allows the broker to be able to bucket different pools of risk based on different parameters, based on whether it's time or position size, and then be able to hedge that trade as one to your LP as a full amount. And the result from that ultimately is a better fill to all your clients, the LP is happy, and the broker is going to have a positive experience and hopefully bring and win more business.
Alex, thanks very much for that. And that's sort of leading nicely into my next question, actually, which is, with so many different types of traders, brokers have to protect themselves and protect their LPs that they're connecting to. So how can your technology manage that? And I'm looking at things like accessing the right type of liquidity, the lowest spreads versus best execution that you touched on there, using data analytics to handle all types of order flows. So how can you protect brokers with your technology and protect the LPs that you're connecting to? I'm not sure who would like to go with that. Vitaly, would you like to touch on that one?
Right, so if you let a couple of words related to what Cristian said, just to elaborate for everyone. So when we talk about different trading patterns and different types of traders, I would just name them. So the first type is active trader. So, and in most of the times when we talk about the trading platform, we assume that it's an active trader who opens like up to 100 trades per day, algorithmically or manually, and quits most of them in the end of the day. But actually what we face today is that more and more people come with money that they want to put not on their bank account, but on an investment account. And it's a bit different approach in all aspects, including the risk management, because people don't want to exit their trades in the end of the day. They want to invest, say, into Apple stock or Meta stock, and maybe quit in 6 months, maybe later. And I believe that still FX and CFD brokers can can bring a lot of value for such traders. So this is pattern number 2, right? Pattern number 3 is the social trading, the copy trading, and we see that people. Today, we have very good solutions showing the performance of master accounts. So people see that there is a master account who performs who brings at least 20% of revenue per year, right? So people subscribe for the successful master account, and it may cause the issue that when master account issues the order, there are thousands of sub-accounts issuing the same order at the same time, which causes a huge load in the system, right? So now we face issues with execution, speed of execution, and the actual price, right? So the first half of accounts could be profitable, the other half will not. And finally, the latter, it's algo trading. So more and more trading platforms allow to connect to them using API, I mean B2C API, not fixed API. So it's not about provisioning liquidity to IB. It's like giving a single user ability to trade using just natural programming language. And in that case, again, we're talking about different pattern because such trader can issue thousands of orders per day. And yeah, I would agree, we need to split order flow from those 4 categories of traders into different pools and take care about these different pools differently. So for instance, for investors, I think broker can safely do B-book. And for day traders, it depends on the performance of the specific trader. So brokers need to store the history and analyze it using the AI system or some business intelligence system and just understand who trades good and needs to be offset and who trades bad and can be booked. And algo traders definitely should be hedged, in my opinion, and you need to have very fast system for risk management. And finally, social traders, well, I would say it's not scalable at some extent. You cannot build a system that will issue millions of orders at the same price level. So I think they have to be like bulk traded at some extent. And I think in 5 years from now, the systems will support that in a better way.
Andy, could you give us your opinion on these, please?
Okay. I think it's very important for brokers to protect themselves. But I think before they think how to protect themselves, they should think how to build a win-win relationship with their investors. Because I think only the traders win, then the brokers can win in the long run. So as you guys just mentioned, I see the keywords is social trading. I think social trading is will be very popular in the future. And because of the COVID-19 pandemic and the change of the economic environment, the investors now, I think will be more cautious and more rational before they invest. They know now the education is important. Education is very important, and they know that they should be more professional before they trade. But the issue here is that, on the one hand, they want to get a good return, but on the other hand, they don't have enough time to get enough education. So brokers need to realize these changes. So it's not you should not only provide like a good quality apps and thousands of instruments for the investor to trade, but you need also to provide more intelligent tools, automated tools for the investors to trade. So the social trading here, I think, does not only mean copy trading, because right now in the market you can find many copy trading tools, but you need to, I think, create a real social community for the signal providers and the investors to exchange their ideas and strategies. And also at the same time, you need to provide the transparent data to help them to get a full picture of the trading. So I think for brokers, they have more options to protect themselves than the traders. Yeah.
Thank you.
What I wanted to add, because the gents have pointed on, is basically what makes it more interesting, and it's a growing demand from the newer generations of traders, is of course the element of multi-asset, having thousands of products, different things, and this of course is very interesting, and brokers must adopt this in order to stay relevant and capture more market share. However, it brings also a lot of complexity and more risks, right? So what's important in this case is basically to make sure that you have such an offering. However, you need to employ real-time risk management systems that are able to read all the trading data in real time, all the other very important information and aspects, and analyze it on the go and provide input into what exactly should be the actions that should take for the brokers. And that's very challenging as well, because we're faced with, let's say, so many different types of traders as well that need to be also bucketed. So that's very important, and I can mention a few examples of that. So, for example, it's very important to make sure that when you're taking on risk, you're always maintaining very strict limits on that is in line with your company, right? So it's very important to conduct what we call VAR analysis at the level of the real-time risk that you're holding, and then make sure that you set strict limits on that. It's also very important to run specific tests, specific stress tests, how we call them basically, in order to understand the potential risks and the potential problems, and then be able to stay ahead of those, right? It's very important to profile each and every customer to understand their trading behavior, to maintain a lot of data points on that, and basically be able to map them to specific risk profiles, right? On top of that, you must have the ability to define quite a lot of complex, different criteria that you keep track of, and then when it comes to the execution, you use that input dynamically into the execution. So some of these aspects are very, very important. And I think that only by having real-time risk management, you're able to really protect yourself as a broker.
Alex, do you want to make a quick point?
Yeah, just if I can, I think to protect the brokers, it's all about data and analytics. At oneZero, one of the biggest challenges we had was, and we did this about 3 years ago, was uploading and storing all of our brokers, 200 plus brokers around the world, take trade data and LP tick data into the cloud. The next challenge there was, once you had that data available, make that data available to your broker or your client to then be able to make their own analysis, or use oneZero's tools, which is Data Source Insights, to help you analyze that data. Part of our data source insights tools was to also give you, the broker, the ability to have better conversations with their LPs, understanding that what flow is likable and disliked. It might be a surprise to some people in this room that all liquidity, your LPs, that not all liquidity is accepted by them. You might get rejections, you might not get the best fills because that flow is actually toxic. But that flow might not necessarily be toxic flow might be toxic for one LP, but it's not necessarily toxic for another LP. So kind of going what Cristian said is like doing testing. We built a system or tool within our data and analytics called Make a Pool Replay. What that does is it actually uses real-time trade data from the brokerage firm, looks at all your maker tick data or your LP tick data, and then you can actually reconstruct different maker pools to look at how the flow would have reacted against that different LP in a sandbox environment. And what do we look at? We're looking at the value of flow. We're looking at markouts, and being able to then also profile, as Cristian has said as well, is profiling those clients, whether that flow is sharp or soft, and then being able to make those decisions about, hey, using those different maker pools we created, we should be routing flow to this LP or this LP because it better works out for them. The next challenge, as Cristian also said, is once you've done this profiling and this analysis of these clients or the client's flow, is to then be able to feed that back into the system automatically to help make those decisions. So for example, once you know that this client's behavior is sharp or soft, being able to then feed that data back into the system to then be able to make automatic decisions through the auto routing, whereby it will automatically route to those LPs.
Thank you very much. I'd like to move the
Tom,
conversation.
I would like to add something small.
As long as it's quick, because we're a bit short on time.
We'll be very quick. We spoke about liquidity and we spoke about all the risk and everything, but there was few words that was mentioning here, and it was social trading, it was community, it was millennials. Now, I think that there is still not a solution in the market for brokers to protect. You mentioned protecting and risking and everything, but in the end, if you want to offer social trading and you are a small broker and not a huge broker, one of the things that is most valuable for you is your data in the end. And you don't want to reveal all of your data to everybody, you understand? So if you have a social trading platform, for instance, and you have thousands of traders that you spent a lot of money in order to recruit them to your broker. And as Cristian mentioned, those traders are not like the old trader. They will switch broker in a minute. There is still a gap between what you can offer. So you can offer social trading, obviously, but you still need to think, if you are a broker, you still need to think if you are big enough and you have the best product that you can reveal all the identity of your clients and let them talk to each other and let everybody know that those are your clients.
Thank you very much. So one of the areas that we have to touch on is digital assets. And I want to look at now is how brokers are managing the complexities of introducing digital assets to their clients, because there are all sorts of complexities that make it harder. So different liquidity sources, market makers, exchanges, pseudo exchanges, aggregators, all coming under different names, often called exchanges. Full 24/7 by support, because this is something that is required in the crypto world. Clearing and settlement or prime broking in cryptos is, again, if you're multiple sourcing, you need to do that because you're going to have very inefficient usage of cash if you don't have some form of clearing and settlement. So how is your technology helping brokers to add digital assets as they are becoming used everywhere by brokers and pure play crypto providers?
I would say a couple of words. So there are definitely challenges with offering digital assets, but there are also benefits for brokers to enter this business. So first of all, Ethereum is switching to proof of stake, and it means that now staking becomes, I would say, a new trading asset or a new investment asset. And I think in 5 years from now, more and more brokers will offer their clients to just participate in staking, so bringing their ETH or some other proof of stake cryptocurrency or blockchain into investment. And it's like fixed income, but from crypto world. Additionally, we have a couple of established crypto exchanges as our customers in DevExperts, and we noticed that they reinvented the wheel, if you want, with not being a market maker directly, but putting a matching engine behind the trading platform and letting clients or their traders to trade against each other, making profits on commissions, right? So this is, by the way, the way how you can manage the risk. You can just let people trade against each other, and yeah, it changes the business model for the broker, but still, they are happy with liquidity being available in this exchange, and you are happy with risk management, you as a broker. Finally, I think that the market of digital assets is not yet well established, because I think in 5 years from now we will see like stocks and bonds will be digitalized. So they will be traded and hosted on blockchain, and I think brokers should start thinking about it today.
Thank you very much. Alex?
Yeah, I think from oneZero's perspective, it's definitely challenges there. We do believe crypto is there to stay. Some of the challenges that we've seen in this space is what our brokers have done done so well. Actually, there's a Venn diagram in our office that we look at and refer to on the whiteboard, which is what is the difference between a retail FX broker and a crypto broker. And just stating some of these points, a crypto FX broker is regulated. They're multi-asset. They're offered currently 5.5 days a week. They've been in the industry for 10 plus years or longer. And then you look at the crypto brokers. Crypto brokers, single asset. They're decentralized. They're new. They've been in the industry for a couple of years now. From the feedback from our clients that we hear is that if someone wants to trade Bitcoin and put that into cold storage, they'll most likely trade with a decentralized broker. But what our brokers have done really, really well is entering that other space by CFD-ifying crypto. So the next phase of doing this is expanding on the liquidity sources or the venues available for our brokers to be able to trade with. The likes of your FTXs, your Binances, your Coinbases, your OKCoin. But the challenges with these venues is that the order books are like nothing we've ever seen before. These order books are, for example, thousands of layers deep, which is similar to like an equities exchange. But the actual available depth is smaller than our retail brokers have ever seen in terms of top-of-book pricing. We've seen certain technology vendors out there who've integrated with these venues, sending 5 layers. 5 layers of, say, Bitcoin is like 2,000 to 3,000 USD notional value. When you have those kind of depths and you're trading on those depths, you get slippage, you get poor execution, and it's hard to also manage the risk. So at oneZero, what we've done is, and what we're trying to do to innovate in this space, is consume that 2,000 layers or depth or more, and actually collapse the available order book into something that our retail brokers can actually execute on. So being able to create depth and show that to their clients. So seeing a 10,000 top of book Bitcoin, then it goes 50,000, 1 million, 2 million, 5 million, etc. And then being able to better risk manage and handle that flow.
Sorry. Cristian?
Yeah, I agree with that. And what we see from our customers, it's when it comes to crypto trading, is definitely they have embraced CFD trading, right? And they make use of quite a few different sources of liquidity for that. So when it comes to the major, let's say, products such as Bitcoin, Ethereum, they actually prefer to go to a specialized liquidity provider that is actually probably doing what you're doing, but already on their side, connecting to multiple exchanges and aggregating it and creating a custom, let's say, price and sending that. And when it comes to the other, let's say, thousands of products, they connect to the FTXs, the Binances, so they make a mix between the two in order to take the best, let's say, of what's available there. Yeah.
I forgot one more thing that I forgot to say is what you said, Tom, was 24/7. it's one of those things that oneZero has really been focusing on, building a 24/7 operations team, which we've committed to the industry by the end of this year. We're going to have a 24/7 ops. It's the team have already been hired, going through training. We have a follow the sun model where we have dozens of team in APAC through to EU and into the US, whereby someone that picks up your phone or responds to your email is not just going to be able to kick that can down the road until Monday and then have a senior person answer that inquiry, but be able to actually have the same level of support that you would have on a weekday as you would on the weekends. And I feel that 24/7 is where we're all potentially heading, but there is also complexities and challenges in doing that because your liquidity for your FX and your metals and your CFDs all co-located in Equinix. The liquidity providers or the venues for the cryptos all in cloud-based. So there's also those challenges there of straddling those two deployment environments.
Yeah, I agree entirely on that. I mean, we've been providing 24/7 for a while, being in the crypto market for a long time, and whilst we can do it and you can do it, our suppliers may not be able to do that yet as well. Cristian, you have a point.
What I wanted to add regarding the challenge of 24/7 is definitely on one side the operations, and we from our side also had to expand to be able to cover 24/7, and it's the same for all the brokers. This adds operational overhead, additional costs, and so on, but as long as the business is there, it makes sense. What is more challenging though that we have seen is that coming from an FX and CFD trading, when it comes to how you are deploying the systems and how you are doing the maintenance of the systems, basically, you had the luxury to handle all of that throughout the entire weekend. That's no longer the case. So you have to evolve and you have to have the systems modularly so that ideally they are able to actually be deployed and be updated without interfering with the running operations. Or at the very least, you have to do it in a very tight, controlled, very short periods of downtime that can only be, let's say, Saturday to Sunday night at some point, and just do it like then. So what we have seen is that when it comes to the brokers that operate in the crypto market, this is exactly the standard, and you cannot, just tell them, oh, I need 1 hour to do the upgrade and so on. There's no such thing. Everything is continuous, and I see that, of course, as a challenge, but I also take it as a positive because in general it forces everyone to really up their game when it comes to the technology and operations. So I think it's a lot of benefits from that.
Thank you. I mean, the next question I'd like to move on to is we live in a difficult, complex world, and there is quite a lot of danger for brokers from fraud, from cybersecurity, from DDoS attacks, and things like that. And if you speak to the people who manage your firewalls, for example, and you ask them to tell you how many attacks they're having a day, they might go, well, no, it's attacks per second we're looking at. It's continuous because it's all done by automated robots around the world. So if you expose I think I read a stat, if you expose a Windows PC that doesn't have firewall protection, it will become infected with a virus within about a second on the internet. So it is a very serious subject. And so I wanted to ask the panel what their feelings are on that, on how they can help brokers protect against that, because this is a very serious issue.
I will take this. Basically, when we're speaking about cyber attack, there is two parts of cyber attack. So is this DDoS attack that you are mentioning, so they go to some endpoint and just get a lot of requests for it, and for this there are also different kind of companies that are masking it. So if you notice, you might don't have you don't know all of your pain points in your system, but if you have a monitoring system, once you figure out what is this endpoint, it's very easy to control it. The other side is the human engineering. There is really, really huge risk from my perspective. All the brokers that I saw in the past that had cyber issues, in the end, it was human engineering. It was some mail that somebody opened and downloaded some file. Some hacker sent the mail with a very, very close, phishing, very, very close email to the CEO with a file that calls salary of all the employees. And it's very easy for for the small employee to click on it and open it. So first of all, you need to, before going and doing all the cyber stuff, and you need to think about your employees, and you need to have a lot of rules in your organization in order to prevent those stuff. I can tell you that I know brokers that are, it's the basic the basic thing is to change passwords. There are brokers that doesn't do it. This is in terms of human engineering. Obviously, in terms of securing the data, I can tell that in Panda we are using RSA encryption protocol, so all the data is very secure. So we are encrypting all the phones and emails and everything on a secure cloud base. So our employees doesn't have access to this information, and it's information according to request. So even if a hacker do get in the middle between you and your client and do get the access to your CRM, he will need to click client by client to reveal the information client by client, and once he will do it, we have a monitoring system that tackles it, and we are noticing it in a few moments.
I think Christian and then Alex, you want to make a point?
Yeah, so I wanted to add in regards to, let's say, the critical systems and of the trading infrastructure. So in order to be able to protect the systems, first of all, you need to understand what are the attackers after. And it's really one of a couple of things. They're either after financial gain by claiming a ransom for not doing an attack in the first place, or maybe granting back access to an already compromised part of the system. That's happening quite often. Or they're trying to compromise or slow down the trading infrastructure in order to then play on delayed prices and maybe make some favorable transactions and claim something there. Or on the other side, unfortunately, there are also situations in which they are just straight away after harming the broker directly. So they are just never going to contact you, never going to say anything. They're just going to try to bring down your infrastructure. They're going to try to basically harm, not allowing your customers to trade, and like this produce direct financial and reputational damage to you. So it's very important to understand that. And then in order to basically protect this critical infrastructure, there are some very basic, I would even say, aspects, like you said, that always have to be in place. So for example, any critical system cannot be directly accessible from the exterior. Only protected internal access should be, and from the exterior you should have different access points that just as proxies in front of the actual systems. On top of that, basically, you need to control very tightly what you are putting out there as information in regards to the location of your systems and all of that, and also who has actually access. So from an organization, you should only be able to give access to just a handful of critical employees that deal with those. Not everybody that might then be subject to a phishing attack, like you mentioned, and they have access to everything. So that's very important. On top of that, we already touched upon DDoS. DDoS protection is very important to have proper DDoS mitigation in place from top players in the market so that they can mitigate accesses of any kind. And another aspect that is always being, let's say, overlooked by brokers is basically that you need to contact on a time-by-time basis basically with experts that are on the network side and that have the knowledge basically of our industry and of trading platforms, and have them check your infrastructure and point out the vulnerabilities that are there basically.
Alex, if you could make a quick point, because then we go to
Sure,
questions.
I'll do this really quick. I think the first rule of Fight Club is don't talk about Fight Club. The second rule of Fight Club is don't go in a public forum in a panel and talk about our broker's security measures. In just summarizing what I think a lot of the panelists have said is that I think when it comes to protecting your clients and your data, it's all about the hosting. Ensure that you're going with a provider that's been seasoned, that's been in the industry, that are experts at what they're doing. We see many brokers wanting to try self-host and manage their own hosting environments, but they often say, oh, let's just hire a server at AWS or Rackspace, but they don't understand the complexities and security measures that the technology vendors up here are actually putting in place to protect them. So my 2-second summary in all of this is for brokers, and I would encourage brokers to trust in their technology vendor to handle that kind of that expertise in that hosting component. And choose someone that's been in the industry for some time, that has got a good track record and know what they're doing.
Well, thank you very much for your useful advice, and I think brokers, that will be very helpful for them. One thing I would add on that is I have a friend of mine who runs a cybersecurity company, and he uses this term, the human firewall, and he says that is the weakest point, as Or was saying. The weakest point is always someone who will reply to an email that's come in or something like that. So cyber training for staff is absolutely vital. Obviously, you've got to have the technology behind it, as Alex says, to make sure that it's robust behind there, but you need to have the whole gamut. I just want to say thank you to everybody for your really insightful comments, and I have a few notes I'd made that is mobile first, so very important mobile, social trading, but you've got to really protect, as Alex says, you've got to protect against things like machine gunning by using data to be able to analyze and work out that you're not going to kill your LPs, because if you destroy your liquidity access, you haven't really got a very good platform. It's really interesting world going forward. We're running out of time, so we can't do any more on this one, but I think copy trading is fascinating because you can have some very expert traders and people copy them, but it brings all of those complications with it that our technology people here can help you with. So I suggest after the panel, you take them aside, ask them how they can help you, and they will be able to help you growing your business going forward, whatever size you are, from small to very large. So thank you very much for your expert opinion and for spending time up here. And thank you very much to the audience for joining.
Thank you.
Thank you, everyone.
Thank you very much, guys. Thank you, Tom.